Hey everybody, it is Mattie here with Altcoin Buzz. Hope you're having a good Monday and a good start to your week. Today we're going to be doing a little bit of a yin and yang. We have a lot of analysts that are predicting higher highs for Bitcoin, or at least a return to the $20,000 high. On Ethereum World News here, a fractal pattern suggests $20,000 is around the corner. We're looking at news BTC. We have a crypto exec saying that Bitcoin is ready to blast past $10,000 towards 12K. We'll let you know what the tweet is all about there. On CCN, Bitcoin whales are the smart money. Don't be the dumb money. In other words, buy low, sell high. 101 investing. But nobody can seem to do that. On altcoinbuzz.io, Japanese bar looking to test Bitcoin's Lightning Network for payments. On newsbtc.com, analysts suggest that Bitcoin bulls may be near exhaustion, and some investors may want to be wary or at least apprehensive. And finally, on the daily hodl here, a global powerhouse opens code to experimental Ethereum blockchain project. We'll let you know which one that is. It's one of the big four consulting houses. But let's begin here on CoinGecko.com with a snapshot of the market. We are at $270 billion, total market cap down 2.5%. And with the exception of XRP, that is up 0.4%, things are down a couple of percentage points overall. Bitcoin down 2.5%, sitting just below 8,500. EOS took a little bit of a tumble after the news. It's down 7% at $7.34. Bitcoin SV somehow still up. We talked about its meteoric rise the other day. It is at $214.79, up 13.2% in the last 24 hours. Here now on Ethereum World News, Bitcoin Fractal suggests $20,000 is around the corner, but don't count on it necessarily. So price action that is seen in Bitcoin market seems entirely random, controlled by a select group of, quote, whales and institutions that can seemingly flash crash any digital assets with a few clicks. Yet some don't think this is the case. In fact, through the use of fractal analysis, some have been able to predict future price action. In a recent post published to TradingView, analyst Flib explained that Bitcoin's recent attempts to break past $9,000 is a, quote, carbon copy of when Bitcoin tried to break $6,000. More specifically, Bitcoin bounced between 61.8 and 78.6% Fibonacci retracement levels, then breaking past the 78.6 to rush to the 4.272. Philb explained that if he extrapolates this price action out to the current setup, Bitcoin could see $18,700 in the coming weeks and potentially move even higher from there if the conditions are impeccable. Now, we just want to mention this in passing, guys, because really you can look at all the data and you can extrapolate, but even Philb himself or herself did this somewhat as a joke, explaining that his followers shouldn't, quote, trade off this chart for obvious reasons. But there is another fractal that corroborates the theory that Bitcoin could soon see $20,000, no joke. If you want to read more about that fractal pattern, check out Kalio's tweet here, who also does a bunch of technical analysis on Bitcoin. You can find them on Twitter. We'll link to all of this in the description below, and you can let us know what you think about this particular form of analysis. I think it has its place, but again, you can't bank on it or count on it 100%. Just my opinion. Here on newsbtc.com, according to one crypto executive, Bitcoin is ready to blast past $10,000 and tap $12,000 in a 40% boom. Vinny Lincoln, the chief executive of Civic, that has been dubbed the, quote, oracle of Bitcoin, on some occasions took to Twitter to convey his latest Bitcoin price predictions. In a tweet, the venture capitalist explained that he believes that Bitcoin may soon, quote, blow through $10,000 to test $12,000. Here is the tweet itself. This Bitcoin action looks aggressive. Makes me think that we may blow through 10K and test 12K very soon, but 12K is a very heavy resistance level. So I would expect consolidation around the 10K level for some time if 12K is likely rejected. And Vinny expects that rejection because 12K is purportedly a, quote, very heavy resistance level. Indeed, $12,000 is just about where Bitcoin topped twice in early 2018, which is when the cryptocurrency market was trying to break from the vice of bears. And more importantly, a collapse under $12,000 is what many believe kicked off 2018's brutal decline and ensuing bear market. Here we have a fun piece on ccn.com. Bitcoin whales are the smart money. Don't be the dumb money. Whales are smart money. These private, non-institutional buyers decided an 85% decline was a buying opportunity. Exactly. The market sent Bitcoin prices higher. Now they hold Bitcoin, hoping to exploit the law of supply and demand. By hoarding coins, liquidity dries up, theoretically forcing prices higher. I've heard the question asked a few times now, but back in 2017, when Bitcoin was on the rise and people were just aggressively doing everything they could to buy it at $15,000, $15K per Bitcoin. Why then, fast forward about a year and a half or a year, whatever it was, when Bitcoin was $3,000, $4,000, $5,000, why were people so reluctant to pick it up? That represented the opportunity buying-wise of a lifetime. And yet we have this counterintuitive instinct that says, well, I'm going to stay away from it. It's on the way down. But the whales are not like that. The whales can override those instincts and make terrific acquisitions. They know they have to buy assets when blood is running in the streets. This is the same tactic used by De Beers, which is the UK-based diamond cartel, to control prices in the diamond market. They've done that for over 100 years. De Beers hoarded an otherwise unexceptional mineral, started its own hype machine that diamonds were amazing things everyone must have. The media caught on and a scam was born. De Beers controlled 85% of the market. They also had the advantage of controlling most of the world's mining. And just like diamonds, Bitcoins are inherently worthless. They're just being hoarded. We all agree on a collective price because that's what we set the valuation to. But they are inherently, I agree, worthless. Just like diamonds, Bitcoins are hyped by those who control it, and the media does the rest. Therefore, it's possible, not definite, but possible that the price of Bitcoin will continue higher until the whales bail. Mark my words, they will bail. Don't end up as the bag holder. Check out the rest of this article about bag holding 101 and a couple other points on ccn.com. But generally speaking, you want to file away these best practices that the whales are employing. You want to follow them. You want to follow whatever currents they are swimming in because those are the successful ones. Let us know what you guys think about this article in the comments below and leave us with your thoughts, your opinions, and your investment strategies, roughly speaking. What has worked for you? I'll tell you guys what has worked for me. Every time I've been able to muster up the courage to do it has been to make a move that's been counter to what everybody else is doing and sometimes my own instincts. Here on altcoinbuzz.io, Japanese bar looking to test Bitcoin's Lightning Network for payments, article by Ethereum. According to reports, a Japanese bar has partnered with a local Lightning Network developer popularly known as Nayuta. So it's a partnership that enables customers to make payments for wine and other beverages using cryptocurrency payments. Later this month, Nayuta will work alongside Awabar Fukuoka to carry out trials on the Lightning Network-powered payment system. The trials are being referred to as, quote, field testing. The Lightning Network, of course, has been progressing lately with high adoption rate in the last few months. It is currently seen as the best way to scale the Bitcoin blockchain. In case the Lightning Network doesn't really mean anything to you one way or another, go back and check out this article by Garrett. This from the 24th of April, 2018. But it's a quick summary and a good 101 of what the Lightning Network represents. It is a second layer scaling solution that is just growing exponentially in terms of functionality and practicality for this space. And if you're in the news for a little bit of a sobering warning, check out this article on newsbtc.com. We won't get into it, but at least according to one analyst, the Bitcoin bulls are nearing exhaustion. And as an investor, you may want to be wary. We'll link to this in the description below. But let's end on this article for today on dailyhodl.com. Global powerhouse opens code to experimental Ethereum blockchain project. Any interested person can now view the code behind Earnst Young's experimental private transaction project on the Ethereum blockchain. EY, of course, is one of the largest accounting and consulting firms in the world, and they released the code for its project Nightfall, which is now on GitHub. According to Earnst Young, quote, Nightfall integrates a set of smart contracts and microservices, and the Zocrates ZK Snark toolkit to enable standard ERC20 and ERC721 tokens to be transacted on the Ethereum blockchain with complete privacy. It is an experimental solution and still being actively developed. We decided to share our research work in the belief that this will speed adoption of public blockchains. Nightfall is intended to help developers build solutions that will make clients more comfortable with blockchain transactions. EY's corporate clients span a number of industries that are using blockchain to streamline procedures, from supply chain management to food tracking to data flow between corporate branches. EY includes among its clients some of the biggest companies and tech giants in the world. A partial list of those are Hewlett-Packard, Verizon, AT&T, Coke, General Motors, and all of the following actually. So quite an impressive list of clients that they have under their belt. Paul Brody, Earnst Young Global Innovation Leader, has told CoinDesk, quote, "We're trying to put together an entire suite of capabilities that would include audit and security and would allow an enterprise to say, yes, we are comfortable that we can do secure, private, reliable, and regulatory compliant business transactions on a public blockchain network." I've said it before, guys. First, they ignore you, then they laugh at you, then they fight you, and then you win. We are entering into the later stages now, or at least the mid stages of blockchain functionality and acceptance. And believe me, Earnst Young aren't the only ones with their eyes on the prize. Deloitte is doing incredible work in this space, as are PwC, as are others. So things are only getting started, in my humble yet optimistic opinion. That about rounds it out for the news, everybody. Do be sure you're following us on all the regular social media and keep checking back into our website, altcoinbuzz.io. If you enjoyed the news today, go ahead, like, subscribe, share, and hit the bell to receive notifications. Best of luck investing if you choose to do so on this Monday, everybody. But have a great start to your week, members of the Altcoin Buzz Army. And we do hope to see you again soon in our next video. Take care.